FTX's bankruptcy is the 10th largest in U.S. history. We've been functioning in the wild west of cryptocurrency, unregulated, and it's time for us to address regulation.
Raoul Pal, who is one of the foremost analysts, investors, and commentators in the crypto space, bears his insights on the FTX collapse. He takes us beyond FTX and gives a comprehensive overview of the whole exchange industry. If you love content related to cryptocurrency, investing, and the economy, then you need to subscribe to this channel and turn on the notification bell. Let's go over and listen to the Crypto Pundit.
Is there somebody bigger here that is yet to get knocked on? You know, some people have looked at the banks like Silvergate. It's possible. I don't think that it's systemic for the banks in that respect, the crypto banks. You know, Signature, Silvergate, those two are the main lenders in the system. What I do know is there's a lot of hedge funds trapped in FTX because FTX was really the avenue for the ability to short markets via the perpetuals. So a lot of hedge funds use them and they've got that assets trapped, which is a shitty situation for everybody involved. And I don't know how that resolves. I got caught out in MF Global myself. It was very similar. It took a while before we got our money back, but we got a big first tranche back. And then eventually over time, as the administrators and liquidators sorted it out, we got the rest back, but that took years. So that's one of the reasons I think the markets have been less aggressively pricing the downside. It's difficult to short the markets. A lot of the hedge funds won't use Binance, for example, because they can't get it through compliance. And a lot of the other products aren't available on the other exchanges. So it's kind of muted the market, which is why it's been so quiet. But there could be other shoes to drop. I don't know really who they are or what they are. You know, people have been looking at Genesis, Jump, and the other market making firms. Is it possible? Well, they've all said no, but as we know, that means nothing in this world because everybody says, no, we're all fine. We're just going to have to wait and see. But I am biased towards if there is another sell-off, you want to start aggressively adding into it. Because the macro cycle is turning, and I think this is the final phase, the capitulation phase. And you know, I've been around this market since 2013, and I've been through all of these, and I've seen all of them, and the sentiment is as shitty as I've ever seen it, for obvious reasons. A lot of people have lost a lot of money being caught in all of these kind of fake crypto, which is, you know, they're centralized, they're opaque, they lend your money out in ways that you don't understand to give you a yield.
FTX is not collapsing alone, and it's taking a lot of other crypto businesses along in its fall. So what other firms were involved with FTX and its subsidiaries and taking the hit? We learned that Binance had held FTT, which a week ago was worth $580 million. It's now an investment that is worth almost nothing. Unfortunate for the world's largest crypto exchange, it was unable to offload the bulk of its $500 million in FTX tokens. Celsius Network is another firm which Raoul Pal specifically mentioned because of the risky business module they operate. Unfortunately for Celsius, they have found themselves in boiling water. Celsius Network, which used to be the biggest crypto lender, but now bankrupt, revealed through a tweet on November 11 that it had 3.5 million Serum tokens on FTX, as well as approximately $13 million in loans to FTX-linked trading company Alameda Research. CoinShares, which is a crypto asset management firm, says despite losing $30.3 million to the FTX exchange, there was no reason to panic, as they still have a net asset valuation of $282 million, Jean-Marie Magnetti, the CEO, revealed on November 10th. Crypto.com had a narrow escape as they revealed that they had transacted over $1 billion worth of crypto asset since January through FTX. Fortunately, only $10 million got caught up in the FTX collapse. Others are U.S. cryptocurrency broker Genesis Trading, which has $175 million with FTX. Hedge fund Galois Capital is also affected, as well as crypto financial services company Galaxy Digital Holdings Limited, and even Silvergate. Silvergate Capital holds funds for companies such as FTX. The fund's management firm had about $11.9 billion in its holding, and FTX Funds was part of these holdings. Silvergate has since revealed that only about $1 billion of its holding belonged to FTX. Alan Lane, CEO of Silvergate, says their relationship with the FTX was purely limited to holding funds for FTX, so the crash of FTX in no way affects their business. This reassurance to their clients has made Silvergate's valuation go up. BlockFi, which is one of the biggest crypto lenders, is standing on a thin straw right now. They were heavily invested in FTX and Alameda, but the story is still developing, and we'll see where it goes. Raoul Pal warns against investing in crypto firms that promises yields, as they often have to leverage or loan out your deposits to be able to pay the yields they promise. If the yield is not coming from a proof-of-stake protocol, then you could be investing in a cryptocurrency or firm that is employing shady strategies to raise interests. As we can see, there is a pattern here. Crypto lenders are the most affected because they use their clients' funds to do business.
Anybody who's been around this space for a while and seen bankruptcies happen is the reason I got into crypto in the first place was because I went through the financial crisis and nobody knew who owned what in the banking system. So when Lehman went under, it was a big mess of trying to figure out who the hell owns what. Then in Europe, Cyprus, the banks went under, and in Spain we had some bank failures too. And what happened is in Cyprus, they bailed in the depositors, which means you were just happily leaving your money on deposit in the Cyprus bank, and they take it and say, well, it's actually our money now. You don't own it. In Spain, they did something even ruder. Well, I don't know if it's even ruder, but more Machiavellian. They told savers, hey, listen, we can give you higher rates of savings on these things on this account. That account was preference shares. And then they defaulted on the preference shares as the banks went under. It was criminal, but they didn't get prosecuted for that. So this kind of shit happens all the time. And I saw that, and when I saw blockchain, I realized that you could self-custody, own your assets outside of the financial system, and nobody could touch them. That is the key thing about the crypto markets that make them different. Every time you go closer to what the traditional financial market looks like, you are adding on risk. Custodying Bitcoin, Ethereum in your own ledger device or Trezor device is as low risk as you're going to get. Now, obviously, there's all the password elements and remembering your seed phrase, all of that, but it's then down to you. You are responsible for your own money. I like a world where we're responsible for our own money. Like I'm responsible for my own car, my own house. Somebody else isn't responsible. Why should I do that with my crypto or my money? And so I think it's a really important thing. Now, of course, we all need to use exchanges. So what do we do? You do your trading on exchange, you buy and sell what you want, you take it off the exchange. That's it. And you can do the same with your NFTs. I'm a huge Ledger fan. Just store them there. If it's shrapnel and shit you don't care about and you want to trade out of it, sure, leave it in your MetaMask, leave it in wherever you want, but don't leave big balances. You don't need the risk. Crypto gives you the answer of not needing to take risk. So I love that.
Raoul Pal says he still trusts cryptocurrencies because he has control over his wallet. He thinks the problem is not the cryptocurrency, but the exchanges and businesses that use cryptocurrencies. The collapse of Lehman Brothers holdings in 2008 is very similar to that of FTX. The bank had taken on too much risk without adequate cash flow. Technically, it had $639 billion in assets, which more than covered the $613 billion in debt. However, the assets proved difficult to sell. In order to raise the necessary funds, Lehman Brothers was unable to sell them. Its demise was caused by a cash flow problem. Raoul's final advice is for crypto owners to keep their assets away from all exchanges, as none of them could be trusted regardless of the claims and promises they make. Do you still have trust in the use of cryptocurrencies? Let us know in the comments below. Remember to subscribe and give this video a thumbs up. See you at the next upload.